All right. Good day, everyone. Welcome to our workshop, our two-part series on paying for college. So, over the course of these two online, on-demand virtual workshops, we'll be exploring ways in which you can save and pay for college, right? So, we're going to be looking at different savings profiles that are available through some local options that parents and guardians can employ and can sign up and can use to be able to store and put aside funds for their students' college and university funds. And we'll also, for our second part, be exploring scholarships. How can you make yourself marketable to be able to succeed in receiving scholarships, money that can go towards funding your future? So it's exciting to be a part of this conversation. We know that we are in an economic crunch and many families are feeling it. And there is apprehension about, is college still accessible? We're here to say yes, or resounding yes, college is still an option for you. It just means that we need to strategize and talk about ways in which we can ensure that we are guiding you towards success and fulfillment of those goals. Let's remove barriers. All right. So we're going to talk about strategies that you can employ. And I can tell you firsthand, I can share not only as a school counselor, but firsthand, I've done the scholarships. My family has done the college savings plans. I've done working while in school. And so I can tell you, I was also an assistant to our professors doing research to be able to have monies come off of my tuition bill each semester, right? So there are ways. You don't have to have all of the money figured up front. There are ways. It is definitely an act of faith, but we do want to put some savings in plan. So without further ado, we're going to have three different representatives, a group from Heritage International, Clarien Bank, and Butterfield Bank will be presenting with us today. All right, so that's the order. Each group will have a 10-minute window to be able to share with you a bit about what they have to offer. And you'll also be able to see their contact information. So if you hear something that excites you or is of interest to you, you know how to connect with them directly. All right. With that being said, I'm here to introduce our first group, which is Mr. Gary Swan from Heritage International. We welcome you this morning. How are you doing, Mr. Swan?
I am doing well. Thank you for the invitation. I am pleased to be here and to be able to present on behalf of Heritage Agency Bermuda Limited. Um, we have a short period, a short window to present some information about the Heritage Plan and what it offers and how it has helped so many people here in Bermuda. So, without further ado, I'm going to proceed. The name of our company is called Heritage Agency Bermuda Limited. Obviously, my name is Jerry Swan. I'm the managing director. I'm sometimes referred to as the agency director. You can see the email address. For me, I'm going to show you some numbers of other sales reps towards the end of this brief presentation. It is also important to indicate that we are licensed by the Bermuda Monetary Authority to market the Heritage International Scholarship Trust Plan here in Bermuda. So let's talk a little bit about some of the aspects of the plan, the Heritage International Scholarship Trust Plan. It's really an exceptional savings plan. It's geared for post-secondary education, that is your son or your daughter or your grandchild or niece or nephew going off to college or university. The plan has been marketed here in Bermuda for more than 30 years. It's important to note that the plan is a US dollar plan. And the principal comes from the funds that a subscriber deposits to the plan is protected. It's not subject to market, volatility. The plan is sensitive in that it is designed to mature July 31st of the year in which the student that we refer to as the beneficiary is her 18th birthday. Why that year? Why that time? Most students, I would certainly not all, but most students who commence post-secondary education usually begin the year in their when they're 18. Some maybe even before that, some after that. So, but the Heritage Plan is time sensitive. Now, there are two options attached to every plan. There's a self-determined option. That means under this option, the subscriber be done roughly 2 months before being able to earn from their degree. Or, as is the case with most students who are enrolled in the Heritage Plan, the scholarship option is chosen. Under this option, the subscriber receives principal, and the student or the beneficiary receives, in addition to the principal paid to the subscriber, the student would receive 3 cash EAPs. EAPs is the acronym for Educational Assistance Payments. And as long as the student is registered as a full-time or part-time student, that student would receive the cash. Transcripts are not required. Grades don't have to be provided in order for for the student to receive the benefit of those payments. A subscriber, any child from 13 years of age or younger may be enrolled in the plan. So the parent, most of our subscribers are parents. We're finding a growing number of grandparents are subscribing to the plan. We do have other adults, such who have taken the plan for their nieces or nephews. So any adult in Bermuda may enroll any child in the plan. The child does not even have to be related to you. So I've just mentioned that point. Let's go to the next one. So you can start with whatever circumstances are applicable to your financial position. You can, with your financial circumstances, you can add to your plan at any time, any number of times, as long as your son or daughter or grandchild is 13 years of age or younger. And here's another important point. A subscriber who's under 65 years of age at enrollment, and a very, very large percentage of our subscribers are under 65, uh, have the benefit of their plan being protected in the event of death or medical disability costs or no charge to the subscriber. And they have that protection up to age 70. Now, every year there are plans that mature. Every year there are students or beneficiaries in the plan who receive their first, second, or third EAP from the plan. EAP is the acronym for Educational Assistance Payments from the Heritage Plan. I'm just going to provide some data to indicate what Heritage has paid out to families in Bermuda during the 6-year period from 2016. I'm awaiting the and what I said, the heritage alone in this 6-year period. And you look at the total that Heritage has paid out to families here in Bermuda, it's pretty close to every year there are families here in Bermuda who benefit from the plan. All the interest that earns from deposit, not too far distant future. associated with a student routine. Um, I've got the year wrong. Will commence commence studies in 2000, and that student will celebrate his 18th or his birthday. And I, the kind of graduate secondary studies program, Caribbean to Canada, the US, the UK, etc., and gives you an idea of the kind of range and cost. A four-year program costs in 37 could range anywhere from 128,000 US dollars in the Caribbean to over $300,000 in the US. If we add to it a student or child born in 2015 and will be 18 in 2033, 10 years from now, a program at that time, a college or university program, the cost may range from 100,000 US dollars any parent. Um, get information about the plan. To do that, the more armed you are with information, then you're in a better position, prudent decision as to whether this plan is something you should have or take for your child. You can contact any of our sales reps. And right now we have 8 sales reps who work under the Heritage Agency Bermuda Limited umbrella. There are their names. They can be contacted. So even though I'm giving a presentation, I'm not the only one who can tell you about the plan. I'm not the only one with whom you can arrange an appointment to get the information. So be financially prudent. Start planning. A child who's 0 years of age, you would have that plan for approximately 18 years and gives you time to build and develop and plan and expand on that plan. That's our number here, the agency number. We are located in the Washington Mall on the Church Street level. And here's some contact information of a few other people. Beverly Dawn Knight, George Smith, and they're both on this Zoom meeting, Zoom presentation. That's the number of our office here. And I just want to thank the folks at Barclay for providing us the opportunity. I've given you some basic information, but to get specific information about how the plan could be applicable to you, get in contact with one of us, call our office number, etc. Set up an appointment. And thank you very much for your attention. Thank you very much for providing this opportunity. Recipe KPM.
Phenomenal. Yes.
Keep the
Keep
end
the
in
end
view.
in view. Yes. And thank you so much for saying yes to our request. Phenomenal presentation. Just one question.
Mhm.
With this being a US currency savings plan, for students that are bound for the UK or Canada, would that be a barrier from them being able to take advantage of what you have to offer?
Absolutely not.
Awesome.
Absolutely not. We've
Awesome.
had students who've been in the plan, who've studied in the UK, who've studied in
Mm-hmm.
Canada, studied in the US,
Mm-hmm.
studied in the
Mm-hmm.
Caribbean, studied in
Mm-hmm.
Australia, studied in Scandinavian
Phenomenal.
countries. They understand the basic tenets.
Yes.
No matter where a student attends post-secondary education, it's going
Mm-hmm.
to cost money.
Yes, it will.
How much can vary on the type of course you pursue,
Mm-hmm.
the place you study at. So
Mm-hmm.
heritage doesn't restrict anyone attending any post-secondary institution anywhere in the world,
Wonderful.
including the Bermuda College.
And thank you so much because I heard I could
So
see
give
that
us a
question
call.
coming up for some parents or guardians. And so I try to anticipate what they might ask. So again, thank you so much for coming to present with us today, Mr. Swan, and Heritage
Thank you.
International. We truly appreciate you, parents, guardians. You see how you can make contact with them. Feel free to do so at your earliest convenience. Thank you again so much for coming today.
Thank you again. Have a great day.
You as well. All right, we're moving on to Clarien Bank with Marley Simons and Anushka Jayan Thuga. So we provide you with a welcome. Thank you so much for coming today. We'd love to hear what you have to share. Feel free to share your screen and be able to engage our parents, our guardians, and young people when they are able to rewatch this recording.
Okay, good morning, everybody. My name is Anushka Jayatunga, representing just me. Marley Simons is not with me today. So I'm going to go ahead and share my screen. You guys can see my screen, right?
Yes.
Just making sure.
Yes.
Perfect.
Mm-hmm.
Okay, so Clarien Bank welcomes the Barclay Institute students and parents to Saving for College. So right now, Clarien's opportunity is to introduce the presentation leader, myself, and to also provide knowledge on the comprehensive range of products and services that Clarien offers. This is also the Barclay Institute's opportunity to ask questions, to connect with our team representatives, and to learn how Clarien can help you achieve your financial goals. So when should you start to save? One of the most important building blocks to financial independence is learning the importance of saving as early as possible. The earlier you start to save, the more likely it'll become a habit. By saving money at an earlier age, you are able to put aside funds that'll help you in the future. So when creating a short-term savings plan, you should always consider a few things. So identify what your goal is. Setting financial goals is an effective way to build wealth while keeping you on track by providing a sense of direction and purpose. So also you have to rethink your budget. As budgeting event, it's important to adjust your budget over time in response to changing circumstances. Record your spending. You have to determine your financial priorities and find ways to cut spending in order to watch your savings grow. So investing in a savings product that will gain compounding interest. Compound interest is when you add the earned interest back into your principal balance, which then earns you even more interest, compounding your return. Earning compound interest is important because it allows your funds to grow faster when the original investment plus the income earned from that investment grow together. So our accumulator account. You've got a saving goal, but you need a little help to reach it. We've designed the 1, 3, or 5-year accumulators to set up a minimum monthly savings schedule. You decide the terms, and we provide our best rates. Starting with the $1,000 initial deposit, choose your monthly payment and earn competitive interest. So this is a small monthly savings chart for high school students, and it's not including the additional interest. So this is just a standard chart, and you guys can just evaluate how much you can make over the 5 years. So the 600 would be you saving that monthly for the 5 year and what you guys can get in return. Of course, the more that you save, the more that you get back. So our CD and accumulator rate. So like I said, the minimum requirement is 1,000. It can be either BMD or USD. These are the only currencies that Clarien currently provides. With Clarien Bank, our 1-year CD or accumulator is at a 3%. Our 2-year is at a 2.75%, and our 3-year is at a 2.5%. Of course, the more that you put in, the better interest rate you will get in return. And that is just a comparison to HSBC's rates currently. So our 5-year saver, and this rate is at a 2.60%, and the minimum balance requirement is $50, Bermuda dollars, or USD. This saving plan allows clients to be more flexible with the amount that you put aside. You are able to deposit any amount whenever you'd like. So that comes to the end of our presentation. I have questions that I picked just to kind of give you guys a little more insight on the products that we offer. So like I said earlier in the presentation, it's never too early to start saving. I know when it comes to saving, a lot of people feel like they don't have it to put aside. So if you're looking for something more flexible, our 5-year saver would be the product for you. It is a minimum of $50, and you can choose whenever and whatever. So if you have a small amount here, you can deposit it, and a larger amount there. As to our CDs and accumulators, it's more of a commitment. So our 5-year saver is more flexible for you and younger persons. And then considering what you need to consider for a savings plan. So you always have to identify your goal. Is it a short-term goal? Is it a more long-term goal? More long-term, the 5-year saver and the 5-year accumulators would be the best. Also, age matters. So if you have grandparents who are looking to open up accounts, a 5-year saver may not be the best idea. And then they would go for the 1-year, 2-year, 3-year CDs or accumulators. And also calculate how much you're willing to put aside. So the accumulators, you set up a standing order. So if you start it with 1,000 and choose 500 each month, you just have to make sure that that money is in your account. Or we have a CD, which is called a certificate of deposit. So that's more for like a lump sum of money that you want to just put in, lock away for the maturity date, and just let you gain that interest. Then the 5-year saver, of course, is the more flexible route. And I welcome any questions that anybody has.
Yes, that was extremely clear and extremely helpful. Thank you so much. I know one question that I often hear from parents and guardians is, I'm trying to save for retirement. I'm trying to pay my monthly bills. I'm trying to put food on the table. Everything is more expensive now. How do I set a little bit of monies and a little bit of funds aside each month for a long-term goal? What advice would you provide to those that are trying to stretch their money in multiple directions, yet they still want their student to go to university and to advance their education? What's one step that they can take to still making an investment towards college and university?
Okay, so definitely budgeting. Parents, guardians, everyone has to budget their financial priorities. With everything being expensive, you have to put money in so many different places. You can still open up accounts with Clarien. You just have to budget your financial situation. So like we said, with the 5-year saver, it's way more flexible. It's not a high commitment. So you can start it with something, and then each month, say 1 month you have this amount to put in, then the other month you have another amount to put in. So that's the more flexible way, but budgeting is the most important thing. You have to calculate, you have to set out your financial priorities each month, and then you have to see what you can give away, what you can't give away. So with parents, I would say like our 5-year saver product would be the best thing because it's more flexible with budgeting and not being able, because you're not sure of what you can always put out each month. So that'll be our long-term saving product that most customers would go for if you don't want to do the accumulator. But you can also do the accumulator, and each month you can put as little or as much as you're able to monthly. But I would say budgeting is just the most important thing when it comes to opening up long-term savings accounts with us.
Yes, I would agree. And if there, for example, is a family and their student is in S2 and they only have 2 or 3 more years, or in this case, 2 more years to save up for university, it sounds like there's an option still here at Clarien, even if they have a few years to save up. Is that okay with a 2-year plan even?
Yeah, because we also have a 1-year too, and our CD accounts are set to automatically renew.
Yeah.
So if you have somebody in S2, you can either do the 2-year or the 1-year, and then you can just allow it to roll over at the end of the year.
Phenomenal. Again, thank you so much for coming to share with our parents and our guardians and our students. It sounds like you've also provided another roadmap, another pathway to success, and we truly appreciate you. Thank you for coming today.
Thank you so much.
Wishing you a phenomenal one. Take care.
You as well. Thanks.
All right. And now we're on to our third presenter for today. And they are the Bank of Butterfield with Delphina Lodge and Donna Mae Evans. Good morning. Welcome, 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 Bank of Butterfield.
Good morning, and how are you?
I'm fine. It's great to see some familiar faces here in the space.
Yes. So we're glad to be here today. My name is Delphina Lodge, and I'm here with my colleague, Donna Mae Evans. She's the Assistant Vice President in Consumer Lending. And we're going to start our slide now.
Wonderful.
Let's just share our screen.
To your right.
Yeah.
Let's click the presentation on the right-hand side, yeah.
Double click. Awesome. So we're here today to talk about preparing financially for college or university. Sure. Next. So I'm just going to formally introduce myself. My name is Delphina Lodge, and I have been employed at Butterfield for 23 years. I share the leadership responsibility of a team of lenders and administrators, and we adjudicate on the loan and mortgage requests. I have a true passion for customer service, making clients' dreams my top priority, whether it be from home ownership, purchasing a new vehicle, or sourcing for education. So a few things we're going to be talking about today is why is it important to prepare for further education, how to prepare financially, ways to save before furthering your education, Butterfield Bank's financing options, advantages of financing with Butterfield, our loan approval process, our requirements, pre-approvals and next steps, and products for your unexpected expenses. So why should you prepare now? Paying for further education is a huge responsibility. The process is often daunting and complex. So to prepare, you must consider the following. How much will it cost? How much can I save before my child is ready to go? How much can my family and I afford to pay? How do I borrow if I require assistance? And what scholarship options are available for my child? So we plan ahead. Budget before you borrow. Start having transparent discussions about preparations you've already made for further education. And that might be personal investments, college savings plans. Explore your financing options. It's always best to be prepared. So you have the scholarship options, you have loan financing, you can withdraw from your pension funds as well. And it's always important to choose a school that not only meets your personal requirements for schooling, but what fits within your financial needs. So the next stop, what are the ways that you can save? So you can attend the Bermuda College, you can take transferable courses. Taking less courses overseas always saves on tuition expenses. So do your research and make informed decisions. Balance out the cost of savings of whether you're going to go to the UK, the Canada, the US. UK might be cheaper for us since we're Bermudian. So living on campus versus renting an apartment. Talk to your family members and see, if they've been away to school, what type of plans did they make in advance? And if that can assist you in the future. Consider getting a part-time job and start budgeting your financing now. It is never too early to start. So next up, school financing options. When you're looking at schools, you must make sure that they might have the short-term payment plans. They might have bursaries. They might offer financial assistance. So do some research when you're looking at schools and see what those schools actually offer that can assist you. Next, we have the Butterfield financing options. So what does Butterfield offer? We offer competitive rates. We have comfortable repayment terms. We have experienced lenders that will help guide you through our process. They'll be there to answer any questions that you might have, whether it be filling out your applications, what do you need? We have knowledgeable staff that can also answer your queries, whether it be in person. We have walk-in service. You can have your appointment over the phone. We also have Saturday banking. Next up, we have student loans. So there are two different types of student loans. We have the educational loan and we also have home equity financing. So with the education loans, they are maximum term of 7 years. We offer variable and fixed rate options. If we need security, that may or may not be required depending on your credit history of Butterfield. We also offer interest-only payments. So with interest-only payments, they last up for 2 years. So you're paying the interest-only payment. And during that time, you're actually saving because you don't have to make that full commitment of the full monthly payment. That will come after the 2-year term. We also have home equity financing, and this is spread over a longer term. So that's over 10 years. And we also have the variable and fixed rate options for this product as well. For this, you will be using your property as security, and this might allow you to finance the full entire program. So a few key points about student loans. The student can actually come in and they can obtain the loan themselves. So with a suitable applicant, guarantor, parent, legal guardian as their co-applicant, the student will be able to establish their own credit history. And the parent can come in and obtain a student loan on their own, but it's always best to allow the student to do it so they can provide, a solid credit relationship with Butterfield on their own. So once they come back from college, they're already establishing the credit. And the approval process is based on the credit worthiness. So Butterfield's financing process. So in order to obtain a loan with us, you must have good credit history. Your debt service ratio must be within the bank's guidelines. And this is normally your fixed expenses, less your fixed job stability, good disposable income, and good savings. And the disposable income is what's left after all your expenses are taken out. So the next steps in our approval application process, you must have written verification of your employment, verification of all your expenses. So if you have loans, credit cards, mortgages with any other institution, we need documentation for that. We need KYC documentation. So that's your passport, your up-to-date utility bill to verify your address, and any other conditions that were outlined in your approval process. And next up, we need to prepare for any unexpected expenses. So with preparing for unexpected expenses, it's always good to have a credit card handy. And at Butterfield, we offer the Advantage cards as well as the British Airways card. And both of them offer awesome rewards. It's always important to make your payments on time to avoid late fees or any excessive interest payments. If you use your credit card wisely, this also helps to establish your credit history. So next up, we have the Butterfield 101 Savings Program. And this is for college students who want help in managing their finances. So stay tuned, there's going to be offering a session coming up soon, and it will be advertised in our media and on the bank's website. So start taking part now. And once you do, if you sign up, you'll be eligible to apply for a credit card. Next up, we have booking an appointment with Butterfield. So we have 3 options. You can call us on our hotline number, which is 298-4799. You can email us at personallending.bermuda@butterfieldgroup.com. And we have Saturday banking as well. That's going to be opened up on July 1st, and that will be held at our Front Street Banking Center between the hours of 10 a.m. and 3 p.m. And that's it for us today. So if you have any questions, we're happy to assist.
Yes, again, another phenomenal presentation. Thank you so much. What should persons consider when they are looking to select the plan that would work best for them? What might be some thoughts? What might be what might lead them in the right direction, that this might be the right plan for them?